Very good afternoon and a warm welcome to the first show actually. We had governors, candid chat, fireside chat, we had deputy governor talking on technology, digitization, everything. And now we have public sector bankers talking about a very interesting subject, what is nationalization, consolidation, privatization, what next? If I ask you, you remember what happened on 20th July 1969? Anybody remembers? 20th July 1969? Anybody remembers? No? 20th July 1969, the first astronaut Neil Armstrong walked on the moon. And just the previous day on midnight, Indira Gandhi announced bank nationalization. So just the previous, that was the first 14 bank with 50 crore deposit base and all. And then of course we have second level of nationalization 1980, another 6 banks which 200 crore deposit space. So that's the story of nationalization. And then we have the story of consolidation. In fact, 2 gentlemen here were a part of the consolidation. Rajkiran Rai, extreme left, and Bank of Baroda boss, ex-SBI and Bank of Baroda. He is the first, actually Bank of Baroda was the first to bite the bullet for consolidation, and Rajkiran Rai was the second. Incidentally, Rajkiran Rai, I approached him, or rather business friend approached him this Monday. Then he very smartly asked, somebody dropped out? Because your program is on Thursday and this thing and all. We said, yes, somebody dropped out. But what we did not tell him, just to taking the football analogy again, typically you see many of the matches this time gone into extra time, and then when you see that extra time also will not yield any result, penalty shootouts are coming up, then typically what happens is this, there's a replacement at the last moment. Within the extra time, some penalty shootout, striker, they get into the team the last 3 or 4 minutes so that they can score a goal and the team wins. So he is here for that. He is the penalty shootouts person. He is here. He has the experience of, he was also the IBA chairman. That's it. So then the consolidation part happened, as you know. State Bank of India had it. And so I'm not getting into all the details and all. And then the privatization part happened. Privatization part has not happened. The announcement happened. Announcement happened that 2 banks will be privatized. We do not know. There have been speculation on 2 banks, but we don't know which are the 2 banks. So this is the context. We have the best of people. Again, formally, Mr. Rai, because he had seen consolidation from close quarter, handled it. Then we have, as I said again, Bank of Baroda first, Sanjeev Chadha. He was not part of the consolidation, but he came just immediately after consolidation. We have Sir Khara Saab, who is more than 20% of Indian banking system, and asset-wise one of the top 50, the only banks globally among the top 50 banks. And finally, to my left is Shankara Prasad, UCO Bank in Kolkata. That's the only public sector bank who could retain his identity, not got merged. Other 2, Allahabad Bank and UBI got merged. So you have seen that all of them have been invited. They are the chosen few. They can give us the best perspective. Here I end. We'll talk about it. It's now, time is now 12:35. We'll end about 1:30 for lunch. We'll take a few questions here and there, not necessarily at the end, so that please keep the microphone ready, and no grievance redressal question, nothing, okay? That why you are not raising your deposit rates or your stock is not performing, not those kind of question, but relevant policy related question. So first round, sir, we'll start with from the left. General, give us a sense what is happening in the public sector banking space, and I will just mention only one more little thing. Reserve Bank of India came out with a paper on privatization, Reserve Bank of India bulletin. It's not an RBI official stance, but RBI research department stance. And then there were talks that probably RBI is not comfortable on with privatization, etc. So on 19th August 2022, RBI issued a clarification. It says that the gradual approach to privatization adopted by government can ensure that a void is not created in fulfilling social objective, etc. So it says, it talks about gradualization. It says that privatization, from the conventional perspective, that privatization is a panacea for all ills. The economic thinking has come a long way to acknowledge that a more nuanced approach is required for pushing it. So here I end, and we'll have some preliminary remarks. Where is the public sector banking there? And then we'll get into some micro issues. Sir.
Yeah, thank you, Tamalda. I think the privatization concept comes at 2 points when the public sector needs capitalization. At that point of time, the talk of privatization starts. Another is when the efficiencies are being discussed, that we feel that the public sectors are not as efficient as private sectors, so they need to be privatized. These are the two areas when we discuss when the privatization comes up. But today, since you mentioned the present status of public sector banks, particularly the post-consolidation, I think public sector banks are doing pretty well. The numbers speak, whether it is on the growth side, efficiency, profitability, and particularly after having 2 black swan events, particularly the consolidation itself and the COVID, which is a major impact. I think the public sector banks have held their ground, and now they have come out of all kind of problems. I think the capitalization requirements are no more there at this point of time. Technology adoption has been one of the best in public sector banks. So I think we are in a good, sweet spot as of now. Yes, when it comes to privatization, because the capital needs are no more there, so the pressure from that angle is less now. It is on the efficiency side. Maybe there are more angles to this, actually, when we talk of privatization, because the RBI paper and subsequent clarification which came has the public services and public good in mind. When we talk of privatization, maybe we need to go and talk to the farmer who takes a 2 lakh loan without any collateral, or education loan borrower who takes a loan without collateral below 4 lakhs, and many of those people in the system, which is basically being catered by the public sector banks, whether the privatization will take care of this section of the population is something which we also have to look into before we get into the full-scale privatization. Yes, privatization as an experiment, I support, it should be done as the government is like frequently talking about it, regulator is talking about it, and there is one experiment is already on actually, so let us see the results, but then full-scale privatization, maybe our country is not yet prepared.
Okay. Thank you, Rakesh Saab. I think you could be, you can be more candid than others because you are no more holding the position. He now heads the NAFED, which is an infrastructure financing bank. Chadha sir, over to you.
So thank you, Tamal. I think there is no doubt that Mr. Rai is right, that in terms of where we stand today, there is no impending pressure in terms of privatization. But you can argue that in terms of change, probably when there is no pressure is the best time to think of change. Right? So, and in terms of the structure of the banking industry, this has been a matter of discussion for the last maybe 30 years. You start with the Investment Committee report, you had the Nayak Committee, and then of course the government has declared its intention that it wants to privatize 2 banks. I think the debate has been very clearly and very nicely bookended by 2 papers. One was the RBI paper that you referred to, and the other was the NCAR paper, which was there, which was co-authored by the previous Deputy Chairman of the Planning Commission. And in that paper, again, the argument was that, all told, the fact is that privatization is something that we need to have as we go along. My sense is that as we go forward, we have to really frame the conversation in terms of one more aspect, apart from what Mr. I talked of, and that is competition. Today, to my mind, competition is suboptimal as far as the banking sector is concerned, which is the reason you find that there are banks which actually are having very good interest margins. And therefore, again, you have banks which actually have the best price to book value ratio anywhere in the world. But that does not, to my mind, really indicate a very efficient banking industry. And so something needs to change. Part of it could be consolidation, part of it could be privatization. In terms of how we can go about it, I think the NCR paper also talks about the fact that we could possibly have a multi-tranche divestment by the government, whereby its stake in some government banks can come down to 49%. Because the challenge that we have is that there are no obvious candidates who could take over public sector banks. Because we have ruled out large businesses in terms of holders of public sector banks. So my sense is that we need to probably have a mix of both consolidation and privatization. And the RBI's current stance and the government stance that we should start by privatizing 2 banks and that take it from there on, I think is important. But we should not let complacency from the fact that public sector banks are doing very well today allow us to really say that we can postpone the debate for another 5-10 years. I think the debate has been on for 30 years. It is time that we brought it to some kind of conclusion.
Thank you. So we'll get into some of the micro issues, but sir, hold on. You are the largest one, so let you be the last artist in terms of talking. Before that, let's hear UCO Bank.
I think this entire concept of privatization stems from...
Incidentally, all 3 gentlemen sitting at the middle are from State Bank of India. Okay.
So this entire concept of privatization stems from the fact that there is a notion that whatever is private is good and efficient and whatever is public is not so efficient. That's not true. Actually, what is true is that efficiency is ownership agnostic. If you create the right conditions for somebody to function efficiently, I mean, things will be good, whether it is public or private. We have 2 standing examples. One is you can talk about ISRO, which is doing an excellent job in the space sector, which is entirely in the public sector. Similarly, we have in the area of atomic energy, we have the AEC, which is again doing a fantastic job. So this entire debate that the public is not good and private is efficient is, it is primarily because of the notion that, private is good, but it is not so. And if you create the right conditions and the right circumstances are there, the public sector units can perform as efficiently as the private sector units. That is the first point I would like to make. And the second point I would like to make is when we talk about privatization, we often compare ourselves with developed countries like countries in Europe and US and all that, and you say that the entire banking sector there is privatized, so it's functioning efficiently. So it's not right to compare a developing country like India with what's happening in the developed world. Because in India, the circumstances are different, and we have to accept the fact that there is also a social obligation which the banks have to fulfill, because what we require is inclusive growth. And that will come about only, when the banks take their social obligation seriously. Just to give an example, I would give the example of Jan Dhan accounts, where almost 47 crore Jan Dhan accounts have been opened. And during COVID, the money could be seamlessly transferred to all the beneficiaries because these Jan Dhan accounts have been opened by the public sector banks. And I will not hesitate to say that nearly 98% of these Jan Dhan accounts have been opened by public sector banks and only 2% have been opened by the private sector banks. So you have seen how efficiently the money could be transferred, how the leakages could be controlled, and how the country as a whole could develop because of these Jan Dhan accounts. So just to give an example, there is also a social obligation which we cannot set aside and say that everything should be privatized.
Karasa, over to you. Preliminary remarks.
First of all, thank you very much for having me over here. When it comes to the debate relating to privatization, consolidation, I would say that irrespective of the ownership structure, what matters most, and more so for a banking sector, is perhaps the consolidation and the size. More so for an economy of our size, we need entities which should have reach for ensuring that they are in a position to offer the solutions for galvanizing savings of this country. And secondly, very important is to deploy them in the most relevant economic sector. Having said that, there are examples of accidents and inefficiencies even in the private sector. And there are examples of efficiency even in the public sector also. So I think more important is that we have to go beyond the ownership structure. We have to actually see that what is the value system, what is the ethics which is there as far as the governance of these entities are concerned. And also, if at all, in the word of our governor, that as Arjun, you have to keep the target very clear. The target for a country like India is nothing but growth and also inclusive growth. So with that in mind, whatever we have seen till now, there is an effort in that direction, irrespective of the ownership structures. But when it comes to, we have to be very mindful about the financial literacy in the system also. So the financial literacy again would be nothing but the contribution from people who are willing to ensure that there is an infinite thinking as compared to finite thinking. Normally we have seen that the privatization leads to a behavior which leads to very finite thinking in terms of the immediate goal in terms of profitability, return on assets, etc. And also in the process lose out on the infinite thinking in terms of the overall growth of the economy. So I think to my mind, for an economy like India, which is at the cusp of becoming an advanced economy, which has traveled a path from the developing to this stage, which is at the cusp of becoming a developing economy, a developed economy, we have to be very mindful of what we have practiced all this year, infinite thinking, irrespective of the ownership structure. Thank you.
Chadha Sahab, tell us, had there been no consolidation, Bank of Baroda was the first one, so what are the benefits you are seeing? Had there been, how the bank would have been different? Or rather, what are you doing differently after consolidation?
So I think we have to look at consolidation more in the broader context of the industry. That it's a declared policy that there is no point in having 12, 15, 20 banks doing the same thing, and therefore consolidation actually works. Number two, again, it is a fact that there were weak banks, and therefore if you have to have a solution, part of the solution lay in consolidation. I think the advantage, of course, comes in what Mr. Khara said, that at the end of the day you need more large banks in India, which was also part of what the Investment Committee recommendation was, what the Naik Committee envisaged. To that extent, I really see it as part of a process in terms of having a structure of the industry which is as close to optimum as possible. I think in terms of our experience, it has been a success. I think one can say it unambiguously. Today, the fact is that although the three banks had different kinds of performance parameters, today the bank is in that position where you can confidently say that now on you can actually deliver a 1% ROA, a 15% ROE, almost for the foreseeable future. In terms of investor interest from international investors, it is very good. So I think, but I would really say that this is really part of a process, and a process that we need to take forward, both in terms of consolidation and privatization.
Yeah, so we'll get, let's, on my left, Somashankar, you are relatively smaller in terms of scale, and I was going to the stock market performance over the last 1 year. Among the public sector banks, your bank got the maximum. The rise I'm talking about. Now you tell us what Bank of Baroda boss, he mentioned also earlier, what the structure we are seeing is this, what the 1997 Nationalisation Committee recommendation. What it said that close weak ones, no bailout merger, no stronger weak bank merger kind of things and all. And it spoke about 3 tier banking system, 2-3 large banks, 8 to 10 national level banks, and rest of them the large local area banks and all. You are not being merged, and I'm not very sure, your name is not there when the people talk about privatizations, UCO Bank's name does not come there and all. So a bank like UCO, what is the future of that? I mean, would you be a local area bank kind of thing, catering to the east and all? If I sound too offensive, at the risk of sounding too offensive, I'm just saying whether UCO Bank is there in this format or UCO Bank get merged or get privatized by somebody taking over and all. As a customer, how does it matter to me? What is your future?
Now, see, first of all, let us look at the question whether there is a future for small banks in India. I think that is the question we need to address. So on one side, we are talking about India being one of the fastest growing economies in the world. There are a large number of huge opportunity in India, and a number of new banks are being opened. So whether in that milieu, whether the smaller banks have got a future or not. Well, I would like to say that in an economy like India, which is going to emerge as one of the maybe the top 3 economies in the world in course of time, and we are talking about the 5 trillion figure, I think there is a future for both big banks as well as small banks. So that is what I would like to say. And the other important point which most of us miss is, see, when we talk about small banks, we forget the fact that the government is the owner of all these banks. So when you are talking about a standalone small bank, maybe it has got its own challenges in terms of spending on IT, in terms of spending on skilling human resources and in certain other categories. But government being the common owner, what has happened is that the government has said, the government is in a position to bring together 3 or 4 smaller banks and say that, how do we optimize the cost? How do we do it? Maybe you can have a common back office, say for these 3-4 small banks. You can have a common IT infrastructure, or you can have a common training system for these for smaller banks. So the 3 or 4 smaller banks can come together and optimize the cost. And that is possible only because the government is the owner of all these banks. At the same time, of course, I think all of us are aware that the government has come out with a program called the EASE, where, certain benchmarks have been laid down based on the excellence achieved by certain banks in the public sector. And the banks which are not so doing well have also been, told that these are the benchmarks, this is how you go about for reaching those benchmarks. So it is in this context, I would say, that the number of banks have been brought down to 12 now, after the mergers and consolidations. And the government in its own wisdom, I think, would believe that 12 is a very optimal number for the public sector banks. And taking into account the common ownership of all these banks, where a lot of things can be done by way of synergies because of the common owner, I think there is a future for small banks also in India.
Khara Sahab, 12 banks, so-called public sector, actually the government-owned bank, 11 is governed by the Bank Nationalisation Act, and 1 is State Bank of India, you have your own act. So 11 plus 1, 12. And State Bank of India itself has got through consolidation. 2008, State Bank of Saurashtra got merged. 2010, State Bank of Indore got merged. And 2017, April, all others, plus Bharatiya Mahila Bank got merged. And if I'm not mistaken, you actually drove that 3rd round of merger, where you are not chairman at that point of time. So what is the benefit you have got from these mergers? And,
Thank you.
What UCO chief is talking about, more cooperation among you, using the sharing back office technology, etc. Is it an academic discussion or feasible?
No, of course. When it comes to the merger and the experience which we had in State Bank of India, of course, when we started this merger journey way back in 2008, it was perhaps it was both thought in terms of a sort of a new sort of a trial which we did, but we could see that the eventual gains which we could accrue from that merger. That was a small little bank which we merged, State Bank of Saurashtra was the first one in 2008, and it gave us enough insight into how should we merge and merge it efficiently. How should we be in a position to derive the benefit of the merger, and we did that. And similarly, soon thereafter in 2010, we came out with the merger of State Bank of Indore and then the mega merger of all the 5 banks plus Bharatiya Mahila Bank in 2017 April. So I would say that it has certainly helped us quite a lot. Otherwise, we would have the deployment of capital would not have been efficient, if I may say so, because these are all very small little entities, and they were actually competing among themselves, and also competing with the parent bank, and in the process they were losing out on the NIMs. So that was something which was very inefficient way of deployment of capital, which we could get rid of, and also having consolidated the capital, we are ensuring that we are in a position to deploy it much better, more efficiently. That is one major gain. Second, of course, we had the similar technology platform. It was not the same technology platform. It was similar, though of course the version differed. And thereafter, we could spend even much more in terms of technology. And today, when we are investing in terms of analytics, we are actually having a much larger database where we have got enough visibility in terms of the customer behavior. They used to be actually almost 1/3 of the bank in terms of actually 7%. We were about 20, in the total equation, as we are having now 21% deposit share, and similarly about 20% of the loan share. So they were actually 1/3 in that total composition, which we are having now. About 6 to 7% was their share. Yes, of course, there were various issues which are relating to the interpersonal integration, etc., etc. But we did it very, very objectively, and we could see that practically there should be enough space for everybody to grow. I must also mention that in the banking sector today, there's a dearth of skill set available, right skill set which is available. I think post-merger we could have the benefit of ensuring that the people with the right skill set should be given the enough growth opportunities also. And they are much more satisfied on that particular count. Now, what was mentioned by Somashankar in terms of the role for the smaller banks, well, of course, our economy is very diverse. There is always a scope for all kind of entities. Larger ones perhaps will have to think in terms of should have the international presence. Maybe the mid-size we should think in terms of having across the India national presence, pan-India presence, and the smaller ones could be the niche for a particular market, particular geography, because understanding a particular geography is equally important in this country. So I think from that aspect, probably what Samashankar mentioned, there is a lot of merit in that. Thank you.
Rajkiran Sahab, you are no more in the saddle, so you don't need to be diplomatic. Looking back, how did the consolidation as far as Union Bank, your own bank, which you drove from the forefront, how did it go? And what are the benefits? Are there benefits or still? Because if you look at the NPA numbers, etc., you can always blame that, no, those guys which have got merged, they brought the NPAs and all. And this is exactly what Narasimha committee said not to do it. It said close the weak banks, no bailout merger, no strong plus weak. But the consolidation, probably we kept in mind that किसी को मरने नहीं देगा, or whatever that Hindi dialogue, no, तो उसका liquid oxygen में डाल दो, तो oxygen liquid उसको जीने नहीं देगा, oxygen उसको मरने नहीं देगा. So that was the situation for some of the banks. Prem Chopra dialogue in Hindi, and for that, from liquid oxygen they are brought in, and this consolidation happened. Is that the right way of looking at it? No.
I think RBI governor made a good mention of one point. He said in our country, somehow closure of banks is not acceptable. I think we should understand when he said that, actually, because, we are generally, we have bailed out banks even in private sector, not only public sector. And if we are bailing out a private sector bank, why not a public sector bank being bailed out? So I think governor has answered that question. Yes, consolidation for us was a much smoother affair because we had a lot of learnings from State Bank merger and Bank of Baroda merger. The first thing we did after the announcement of merger within 2-3 days is meeting SBI at SBI office and then meeting Bank of Baroda at Bank of Baroda office just to understand what are the problems they faced during consolidation. So we didn't repeat the same mistakes or didn't go through the same process what they went through. So we had better learnings. Our planning was much more targeted. Actually, Union Bank completed the amalgamation process in 10 months. We started in April. By 27th January, I think our amalgamation was complete, including the technology platforms. So that way, it was well planned, very efficiently executed, with good learnings from the previous mergers. So when it comes to the advantage, now like since you already mentioned, I'm out of the public sector banking space, I can be very candid. And these are the facts which are very evident actually. I think consolidation has done a lot of good for the banks. At the same time, just to pick up a point from what Mr. Prasad was telling, one problem with the banks in public sector space, the smaller banks behave as miniature versions of larger banks, trying to do the same things what large bank did.
Duplication of business, same way.
Yes, I think this is what, if they have to survive as a smaller bank, maybe they should find their business model differently. They get into different space, not to compete with the large banks, but to have their own business model. I think that will make a good case for those small and medium banks to survive, not to act as miniature versions of large banks.
Okay, so this cohabitation and cooperation, what Prasad was suggesting, you think that's not the way? They have to be different.
That actually, see, actually it is not only among public sector banks. There are a lot of technology platforms which are coming up, being built by public sector banks and many other banks. With these platforms, the products will become agnostic to banks. Because these products will be available in the platform, the customer can choose which product. He will not see which bank is giving this product. As long as the product is right, service is right, he will go and pick up. And that is already coming actually, so they are not bothered. So your branding or bank name is not going to count, as long as you have a right product and the right pricing. So technology platforms are going to be there. Whether it is a cooperation between public sector banks or other these things, your account aggregators and a lot of other things which are coming in is going to develop these platforms in a big way, particularly on the retail space and also on the MSME space with a lot of data being available. So this platform what we are talking about, yes, it will make a beginning, but it is going to be much bigger than what we are thinking.
Yeah, talking about bailout and the government support to the banks, from the 90s till the onset of COVID, it was 4.17 trillion, 417 lakh crore that has gone from the banks, your money, my money, taxpayers' money to keep some of the banks alive. Any question anybody has? Anything, any interesting question? Yeah. Can he have these two gentlemen, can he have the microphone please? No, what is? Yeah, and if you have the second microphone, just to cut down the time, give him that also. The other person at the back, blue shirt, sir, just make it very, very brief.
Yeah,
okay?
thank you, Tamal. I think one clear message I got from the panel was that dramatic reforms like what was envisaged by the PJ Nayak committee report or something is not really acceptable to anybody on the panel. And neither is the NCR paper reform, which makes only exception is Mr. Khara's bank. So that's the only probably survival bank in the PSBs. So now if we are living with just some consolidation, what would be your advice on how the governance structure can be improved? Is the Indradhanush enough for governance structure for the PSPs, or we need to go further from here? And in which case, how do you have an arm's length relationship between the DFS and the PSPs, and whether that is desirable, and if yes, how to achieve it?
Mr. Khara, question related with DFS.
Yeah, well, I think
Department of Financial Services, everybody knows that's the arm of Finance Ministry.
The way I look at it is, I think even in the current context also, when it comes to the governance and of the banks, it is all being the board-run entities. If at all, I would like to say that if at all board is constituted in a manner that it takes care of all the critical requirements, what is there for the bank, then perhaps their guidance is something which goes a long way. And distance between DFS, etc., I would only like to put it like this. Though there is a representation from the government, but I don't think so. At least I have not come across a situation where there's an interference. There's a guidance, there is no interference. That's how it is, how I would like to really put it across. So I think in the given situation and structure, there's enough autonomy which is there. Only thing is that when it comes to hiring, etc., even there also now there's enough enablers which have been put in place. Practically all the public sector banks were made to hire their risk specialists from the market because there was a skill gap which was perceived at a point of time. Now even for that matter, even the ease reforms, they are also being administered by the board of the bank. So I think that way the kind of structure which has been put in place to have an oversight over the governance mechanism, that has been very well articulated, and that is probably serving the purpose as well. Now in terms of the skill gap, of course we need to identify, and wherever possible we have to bridge those skill gaps by hiring people from the market. That I think is a reality in which we'll have to live. And also I think for a bank of our size in particular, if I may say so, we cannot depend upon external resources for indefinite time. We have to also build up our own resources as well. So that's why the training system acquires much more significance. It cannot be what it used to be over all these years. It has to be very contemporary. Maybe we'll have to bring in the trainers from external institutions and also send our people also for the external training wherever skill gap is observed. So this is what my sense is on.
Yeah, please.
I'll just, to put it very bluntly, government is the owner of the public sector banks, right? Similarly, private sector banks are also owned by certain entities. When the private sector banks are owned by certain entities, do they not have a say in the running of the private sector banks by way of representation on the board? They do have, right? Similarly, if it comes to government, since the government is the owner, there is a representative of the government on the board of the bank. And if he is there on the board of the bank, he should also have a say when it comes to the policy level decisions which are taken by the bank. I don't know why this notion is there that the government being the owner should be away and it should not interfere at all in the running of the banks, if you use the word interference in the negative sense. So why is it, that we always talk about saying that the government should be away from the banks? When it is the owner, it should be there on the bank board, and as long as the advice given by the government is constructive and it doesn't interfere in the day-to-day management of the banks, and it only gives its advice at the policy level, I think they should be able to have their say. That's the point.
So by no means I was suggesting that the government should. I wanted your opinion.
Thank you.
But the second question comes is, what about the minority shareholders then?
I think minority stakeholders' interest also is also eventually taken care of. If at all the bank does well, bank is efficient, I think everybody's interest is taken care of.
Thank you.
I just wanted to thank you all for a very involved discussion. My point is that in the last 5 years, as per the Reserve Bank of India data, you have lost 10% market share, and the private sector has gained more than 10% market share. What has changed that now you are confident and you tell the finance minister that we are not going to lose market share? See the microfinance industry, how they have grown. See the NBFC industry, how they have grown. And you have been here for 50 years. You have lost all these things. So please enlighten, what will you do differently in the next 5 years that we can say as minority shareholders, we should be with you.
Thank you.
Thank you.
So let me, that was actually part of the question. So let me give some data and then all of you can give, because we have about 15 minutes. So this is, and then one more round. 1990s, before economic liberalization and the new set of banks came, public sector banks' share in the assets was 90%. 10 years down the line, 2000, it came down to 80%. 2014-15, it was about 75%. And by 2019, I don't have the letter number, it's about 61%. That's the stock, how it is going down. And incrementally, let's see how they are losing out the market share. In assets, 2014, for every 100 rupee new assets created, 72.6 belong to the public sector banks. But by 2019, it came down to less than 9.51%. So from 73 rupees to 9.5 rupees per new 100 rupee assets created. In 5 years between 2014 and 19, if I am not mistaken, Mridul Sagar, the person who was asking the questions from Reserve Bank of India, is a MPC member. I think RBI have stopped giving this incremental number of late. And when it comes to deposits, okay, then of course, sir. And when it comes to deposits, in 2014, for every 100 rupee new deposit, 76.4 rupees used to come for the public sector banks. By 2019, it has come down to 20.48. So they are the proxy sovereign. There the money is safe. They can't fail. Still, deposit mobilization also incrementally is going down. I don't have the latest numbers. I don't think Reserve Bank of India gives this segmented numbers going on. So how do you actually, is it a fait accompli, or how do you gain back your share? Bank of Baroda MD, you are nodding your head, sir. So first you tell me.
I think what you're saying is absolutely right, and what the gentleman said is absolutely correct. I think that's the elephant in the room, which is why I said at the outset, we cannot be complacent simply because the times are good now. Because the times are good, this is the time when we should make the changes that are required to be made, right? And it is a fact that we need to look at things differently. To my mind, they could be different in two ways. One, we need to make sure that there are some banks which are privatized. The government's agenda, to my mind, makes plenty of sense in that particular respect. The second part is that we also should be conscious that there's a little bit of an unfair deal which is currently on, which means that the privileges of the public sector, for instance, that we shall have, within quotes, a monopoly on government business, they have been taken away, which is very fair, because the government also deserves the best of service. But at the same time, the obligations remain intact. So therefore, to my mind, that is the second step we should be taking. So both move in both directions. Again, move towards privatization. That, I think Mr. Sagar's point is very valid. I think we have had a lot of reforms within the current governance framework in terms of the quality of boards, how you recruit CEOs. But now if you have to move from this step to another step, from the banking board bureau running or recruiting the boards to the board actually appointing the CEO, then I think privatization is a bridge that we would need to cross. And privatization need not mean that you hand over the bank to somebody else. It could only mean that it becomes a widely owned entity where the current constraints go away.
Karasap, how do you get back the market share? Is there any way, or are you just giving up? It's a fait accompli.
No, I look at it, of course, market share is one of the very important critical component which we cannot lose sight of. But equally important is also market share at the right price. So, deposit market share in a banking industry, you can zoom, no problem. But you should be in a position to lend also. If at all you are increasing your deposit rates, if at all you lend only to the risky sectors, then probably 2 years down the line, only will be all making provisions only. So similarly, when it comes to advances market share also, it is very easy to increase the advances market share by quoting prices which are not related to the risk. One should be cognizant of the risk and one should price the risk accordingly. That is what I very firmly believe. I think market share is a function of the increase in the market as well as the increase in the number of players. But at the same time, for an individual entity, it is a growth which is very material. Of course, if at all we have invested in terms of infrastructure, we will have the market share also. But while chasing the market share, we must not compromise on some of the fundamentals. That's what my belief is, and if at all we do that, we can ensure that we create enough value for the stakeholder and shareholders will continue to be there. Thank you.
Anybody, you want to add anything?
I just wanted to add, suppose you start historically with the figure when the banks were national, I mean, when the private sector banks have entered the banking space, obviously there will be a loss of some market share, which is happening even in the case of life insurance corporation also. That is something natural. A certain market share would be lost when there are new entrants who have entered the banking sector. That is one point I would like to make. And then
No, I spoke about incremental.
Incremental. 2014, that particular year and all that you are mentioning.
Yes.
I think all of us are aware that the public sector banks especially went through a very tough time. I think the reasons are very obvious at that time, that the loans have gone bad, the banks have gone into losses, capital was an issue. And these were the problems which the banks have, which we have gone through as public sector banks. And I think it is at that time, I think the public sector banks have lost out on, as far as market share is concerned, to the private sector banks. But I think having come out of all these problems, and I think he was asking, saying, why should I remain with the public sector banks? If you had been with the public sector banks in the last 1.5, 2 years, the kind of return that you would have got on the money that you would have put in public sector banks, I think you take the share of any public sector bank, I think it has more than doubled in the last 7, 8 months or 10 months. So obviously, things are looking up for the public sector banks. And as Mr. Chadda said, I think this is a time where we should look at what is it that we can do and what is it that certain private sector banks are doing which we are not able to do within the constraints that we have, so that we can come up to the expectations of the customers and improve our market share.
Sir, I'll give a very short perspective. Actually, when the market share of public sector banks was so high, that was one complaint against our economy, that your public sector share in the banking space is very high. It was destined to come down. So I think maybe we are in ideal space now. I think a 50% market share with the private sector and 50% with the public sector will be ideal composition for the economy also.
Talking about
Cry for losing market share, because private sector is bound to come up. That's the way it was planned.
all four of you, can you give your ideas to the audience, the recent exuberance, the growth in particularly in credit? I mean, are we showing the, I'm repeating the question which we discussed also with the governor, the issue, are we showing the seeds of future problem? I'm just coming, this number, Bank of Baroda credit growth in the September, I'm talking about September quarter year on year, 15% credit growth, deposit growth almost on a similar line, 14%. State Bank of India, 21% credit growth, deposit growth is 10%. UCO Bank, 10% credit growth, deposit growth, no, UCO Bank, 10% and 17%, yeah. And Union Bank, 25%, of course you are not responsible for 25% advance growth and 14% deposit growth. So this kind of particularly advanced growth, is it sustainable or are we seeing mispricing of risks? Sir? Not on your, I'm not talking about you, but generally are you concerned that this cannot be
So I think
sustained and will end up again accumulating bad loans?
Yeah. So I think the question was, I think, very well addressed by the governor. What we have is a mix of factors. One is the base effect. The other is the fact that there was pent-up demand. Just to put one data point in perspective, automobile sales grew Y last quarter at about 49%, and bank auto loans grew by 25-30%. Nobody expects that to continue indefinitely. So things will moderate as we go forward. Number three, we have seen mostly misallocation of capital, and we have come to grief when the irrational exuberance has been manifested through the corporate lending sector. This time that is not the case. Most of the increase in lending that's happening is in the retail sector, which again, because of the fact that during COVID there was pent-up demand, that is getting manifested itself. So to my mind, as of now, whether we look at the actual growth, it is not, if over a 3-year period, I think it would average about 10, 11, 12%, which is pretty much par for the course. Number two, in terms of advanced indicators, if we look at our books, not only are NPAs at historical lows, even SMAs, which is the best advanced indicator of any stress, they are at historical lows. So for the moment, I believe it would be premature to have any apprehensions on that count.
Prasad sir, I mean, like talking about retail, now the perception is some analysts say that public sector banks are now again going to the hard mentality. Chalo retail, but they have not all of them have developed the expertise for retail.
I think,
And the next problem can come from the retail. Is that correct way of looking at things?
See, sometimes the way you look at it is, sometimes we say that the interest rates are going up, and people tend to link the demand in retail to the interest rates, and they say that, the interest rates are low, the demand should pick up. But historically, you have seen when during COVID, interest rates were at a historical low, there was no demand for retail loans. And now, with the repo rate having gone up so much, still we see there is a lot of demand for retail credit. So what happens is, I think what I tend to believe is that the demand for retail credit depends on the way the economy is doing. Since the Indian economy is doing well, I think that is also reflected in the retail demand. And the other thing is that I don't think there will be any issue with having a problem in the retail sector later on, because I think the banks over the last few years, having learned their lessons, have put the necessary risk models in place, and there is a lot of due diligence which is done based on scoring. And the other point I would like to make is that if you look at the amount of data that is available about a retail customer today, starting with CIBIL, and so much of data is available. We have the GST data, we have the CIBIL data. We have access to so much of data relating to a customer that our credit appraisal or our due diligence of a customer today is much better than what it was a few years back. So I think to that extent, I think I don't foresee a problem, as Mr. Chedda said. Whatever signals are there right now, they are all positive. We don't have any stress as such. But I think we are doing a better job than what we were doing earlier, just because the data available is also much more today.
Mr. Khara, do you see any risk, mispricing of risks, and there's a lacuna in underwriting, or you think everything is fine, as Prasad claims, your former colleague?
Well, I think as far as industry is concerned, there is a definite improvement in the underwriting practices. And it is also attributed to the ease reforms which got introduced about 4 years back, and there was a very clear focus from the DFS to nudge all the public sector banks to improve their underwriting. And one of the steps which I mentioned in terms of hiring CROs from the market was also in that context which was done. But yes, of course, having said that, a mad rush for the retail, one should be very mindful in terms of their ability to do the collection efficiency should be good. Only then perhaps they can probably navigate that kind of a situation better. So I think that way I think banks have now matured. They would be undertaking the business which they feel that they are comfortable doing. So I don't expect the kind of thing which you mentioned in terms of are we waiting for another accident, because when we look at the ecosystem in the larger context also, here is a situation where the borrowers are also more responsible in their behavior. It's more responsible borrowing which we are observing. Secondly, the ecosystem which is there for collection, even that has strengthened. So I think even everybody is, all the borrowers are aware that it actually involves a huge financial cost if at all they don't behave well. Similarly, bureaus have come into existence. So I think these are the kind of enablers which have strengthened the financial system. But nevertheless, banks have to be very mindful in terms of their ability to underwrite a particular risk and their ability to manage and navigate that risk also. Thank you.
Thank you, Mr. Khara. We have a few minutes, so just have a coming to the subject of the discussion: nationalization, consolidation, privatization. What next? So each of you, starting from you, can you tell us that what is the actually way forward? If it is privatization, you don't need to name the banks, but what kind of banks we need to privatize, if at all? Because we spoke about budget, spoke about two-bank privatization. Of course, IDBI experiment is still on as we speak. It's on the table, but that's a separate story. So what are the kind of banks, etc. And second is, our Prime Minister himself said that the government does not have any business to be running businesses. So if that is the case, then how do we address the new landscape of banking? Should there be some banks, I'm not naming, which will be for the social purpose? Because you need to push through PMJDY, you need to push through so many other things which sort of social activity, if I may say so, even though we call it financial inclusion, and possibly rightly, but there's a cost to it, and you need to bear that. Bankers know that privately how much cost is there. So you treat them as a business enterprise, you expect their stock markets to, on the stock market they do well, at the same time you want them to do this kind of activities. So do we have a separate segment, like a few banks which are owned by let them be delisted, owned by the government and do this kind of work, and rest of them be on their own? Or what is the new landscape? If 1.5 minutes or 1 minute each, starting from you and ending with you.
Yeah, first of all, banks are commercial institutions. I don't think there can be a bank which can exclusively be there for implementing government schemes. So, I mean, implementing government schemes, I don't know. I mean, like, if you look at it in terms of cost, Jan Dhan accounts at one point of time were looked at in terms of cost. Nowadays, they are extremely remunerative for the bank. So, I mean, this idea that whatever are the government schemes, they are not remunerative, they are not paying, so there is a social cost involved. It depends. I mean, in the sense, you have to look at each of those things and then come to a conclusion whether, they make sense or they do not make sense. So this is a social cost which obviously the public sector banks have to take. So they cannot be an institution which is set up for exclusively implementing government schemes. There can be a social cost, or it may not be a social cost. It may be in the long run, it may be beneficial for the banks. That is one thing. And the second thing is, like, going forward, whether privatization is the way. As I said, that I believe that efficiency it has nothing to do with being public or private, but it's a call which is entirely to be taken by the government. If the government is looking at it in terms of divestment, in terms of raising resources, in terms of reducing its presence in the banking sector to a few institutions, I mean, it is entirely a call which the government should take from the divestment point of view rather than from the efficiency point of view.
Okay. Khara sir, quickly, 1 minute each.
Yeah, I think my sense is that, of course, what you mentioned in terms of the social schemes. See, if we look in a broader perspective today, even all corporates are required to do CSR. And the objective is very clear. It is essentially to ensure an inclusive society. So I think from that point of view, depriving a particular sector from the banking lending is perhaps is not a good idea. Only thing is that we need to inculcate the financial discipline in that sub-segment also. They should be responsible borrowers. So I think that will go a long way in terms of building up their enterprises also, and eventually for making an inclusive society.
You want UCO to be privatized? You want UCO to be privatized?
Well, I think privatization is something, I'm actually agnostic to privatization or public sector.
Okay.
It is, I always say that it is agnostic to the ownership. The entity should be efficient.
Okay.
Because we have got examples in private sector also where they were bailed out by the public sector.
Sure. Chera sir?
So I think there are different stages in a country's development. There was a time when financial inclusion was really the biggest imperative for us, and I think public sector banks have served us very well to reach there. Today, when we talk of a 5 trillion economy, I think we need a banking structure which possibly needs to be a little different from the one we have today. Therefore, we should look at privatization. To my mind, the government's currently articulated policy, which is to say that we would not want more than 4 entities in any sector in which the government seeks to participate, and also that we need to make a start by privatizing 2 banks, I think is the right one.
Last word is yours, sir.
Yeah, I think there is further scope of consolidation. What Cheddas have just mentioned, to reach that number of large-sized banks, which are 4 or 5 in number. So there is a scope. Privatization, maybe, according to me, we can make some experiments with 1 or 2 banks just to understand how it works. But for our country, looking at the disparities, what we have in the economy, maybe it will be 10, 15 years away where we can go completely private. Maybe in meanwhile, we can pick up some of the recommendation of Nayak committee again, which said a holding company structure in the beginning, which will act as an intermediary between the government and the, transferring the ownership to the holding company, then trying to reform the whole human resources systems in the public sector setup. That is one gap we find actually. The HR reforms are a must for public sector setup. I think that can happen by divesting to a holding company, and from there, maybe 10 years down the line, moving to full-scale privatization may be the way forward.
Thank you. So these four gentlemen could be as candid and intellectually honest as possible, given the ecosystem. I mean, DFS, you don't expect them to talk about DFS, etc., finance ministry and all. But within the ecosystem, I think as much intellectual honesty, I mean, we can't have better than this. So the key takeaways are they have accepted the reality that yes, there are tough times and bankers are getting now their acts together. There is nothing much to worry about at this point of time because of this credit of tech, because their underwriting capability, risk management is far better. They have learned their lessons. Market share loss is a logical way of looking at things because there are more competitive, nimble-footed private sector banks, but they are not in a position to give up. And they also feel that, yes, privatization in some form, not in a hurry, but need to be done. Just one small thing which Prasad spoke about that, he spoke about ISRO and others, there are excellent private sector entities. He didn't talk about Indian Airlines, Air India, he didn't talk about. Now Air India, you kept on, if there are some young kids in their teenage or early 20s, they would tell us that from since their birth, they have been hearing it needs to be privatized and all. But nobody cared much because they are not handling with money. Banks do handle money, so we need to care. And we are not using the taxpayer money. We did never use that way to keep Air India alive. And finally the government took so long, but privatization happened. So let's wait which are the two private banks, which are the two public sector banks go the Air India way and how fast. But they don't mind, that's the logical step, all of them think that. So give them a big hand and thank you for listening to it.